You guys really appreciated the uranium video last week and the incredible 1000x performance of the stocks around it in the previous cycle. Uranium is a hot topic in the commodity world, and winter is coming. Today we'll do an analysis of the overall uranium market, compare it to Bitcoin, and also analyze a few, I think, very interesting stock charts. Not advising you what to do, and I don't stand to profit from any uranium stock moving in any direction at the time of publishing this video. I'm just sharing analysis that you can repeat yourself, and I hope that you'll find it educational and useful input to your own analysis. Sadly, I cannot predict the future, and no matter the strategy, you always stand a risk to lose all your money. Maybe tomorrow Elon Musk tweets that he's found an asteroid in space that's half gold, half uranium, so price of both goes to zero. So don't trade or invest with money you need. Really don't, and that's no joke. The crypto markets are down and it feels like this has gone on forever. But rest assured that the last wave in the ocean hasn't come yet. There will be new speculative, crazy parabolic rises during the next liquidity cycle and PMI cycle. New crashes, and new crashes. Fear and greed isn't going away, folks. Uranium, in the meantime, can provide a very interesting opportunity while we're waiting for this pesky Larson line to stop being blue. There must be something wrong with it. Who built this shit? Let's first look at the overall uranium market. This ticker, UX1 !, which represents the physical uranium price, which apart from two small fakes has been trending down as long as this chart goes and even before that, from its peak in the early 2000s. And we can see that it reached about $17 here in November 2016. Then it truly reversed, and we've been in a steady uptrend since, where the uranium price has been going up. Larson line is gold and uranium has wind in its sails. Now let's look at a couple of uranium stock charts. And something like this you can analyze on the weekly chart or bi-weekly chart. And as you can see, well capture the true trend. Cameco is the world's largest publicly traded uranium company, based in Canada. In 2015, it was the world's second largest uranium producer. Here I found some updated numbers from 2021. Kazatomprom is by far the largest, with 25% of world production. Then comes three companies that are about the same, where we can find Cameco. Recently, Cameco, together with Brookfield Renewable, acquired Westinghouse, which is one of the world's largest nuclear services businesses. And as you can see here, look how concentrated the uranium companies are already. It's just a few companies here doing all the production. 10 companies do 90% of the world's uranium production. The top 7 do 75%, and it only takes the top 5 to do 61%. From a consumer perspective, oligopolies are bad. But that's not our role as investors to assess. There are regulators who do that job. And if they've approved this, the more concentrated the power, the better for the company and its investors. Never in the world, I think that's been clearer than during this era, where every single company we use daily is in practice a monopoly company. If Google decided to remove me from YouTube for saying the wrong sequence of keywords, there is no alternative really. Same with Facebook during its time, Google search, still today, the iPhone, and so on. So this is definitely good for Cameco specifically. And as you can see from the chart, regardless if we're on the bi-weekly time frame or on the weekly time frame, Cameco is in a very healthy uptrend. And if it breaks these highs, it could break into highs that we haven't seen since 2011, almost 12 years ago. And as you can see, it's still not anywhere near its highs from 2007. And if anyone is new here, Larson line is my proxy for trend. Gold means up, blue means down. But we can actually take this a step further. How about we compare this chart to BTC? We always trade things in relationship with each other. Some trade against USD, some of my fellow Swedes trades against the SEK, some trade to increase their ounces of gold, and many trade to increase their Bitcoin holdings through trading in and out of altcoins or longing and shorting. Then when Bitcoin goes on its next bull run, they have hopefully more BTC to ride that trend with. What if we take that perspective on this highly speculative uranium chart? If you didn't know, you can type any formula into TradingView. So even if there is no Cameco to BTC ticker, you can just type CCJ divided by BTC USD and you get that chart. And Larson line and calculates and everything. And then we see something potentially interesting. Bitcoin has been a vastly superior investment for this entire duration from 2011, but now that has actually changed, and this one is in an uptrend. I don't want to read too much into that, but it is exciting times, and we're seeing a period of the market which is different from the previous 10 years. Now let's look at the next chart, DYL, Deep Yellow. No, not this one, but this one. It's a uranium exploration company based in Australia, but with a strong focus on Namibia. The CEO, John Boshoff, sorry if I pronounce it wrong, came from Paladin, where they created those tremendous results I showed in the beginning of the video, the 1000x from 1 cent to $10. And as you can see here, many of the other managers also came from Paladin, including the head of exploration and head of project development. Isn't that amazing? They must have made so much money on that stock run, but just keep working to do it again. That's what builds mastery, to do the work because you like the work, not for the compensation. Anyway, Deep Yellow has announced its merger with Vimy Resources, now in March 2022. This merger will allow this top-notch exploration team from DYL to drive results from both Namibia as well as the Australian assets, which is Vimy's Mulgarok project. As we can see from this chart, price bottomed here from June to September 2016, then moved up here, faced resistance, hit resistance again and again, then finally broke out of that resistance, turned that resistance into support. It held once, it was front run twice, it held 3 times, 4 times, 5 times, and it's still in that range, which on the top side has a new very clear resistance area, which has already been touched 3 times, and price is in this rectangle. And the trend hasn't turned down. So should this trend break on the upside, you can easily see that based on the chart alone there is significant upside potential. And the number one key item with uranium companies, or any company, is the leadership. If you have an experienced management team who have been successful in the past and have their specific roles and responsibility in their blood, it's just more likely that that company will be successful again. Doesn't always happen. It's just more likely. People who bet on that Elon Musk, the most successful entrepreneur in the world alive today, will fail miserably running his next company, Twitter, is really betting against the trend. And as you know, I'm more of a follow-the-trend guy myself. And this guy John, who led Paladin in the mid-90s, one of the most successful uranium companies in Australia, and his entire team now running Deep Yellow is factually a plus. So this range is from about 0.56 up to about 124. The trend is up, and should this rectangle resolve on the upside, it could explode. Sorry, had to do it. Another key company is DNN, Denison Mines Corporation. DNN is a Canadian uranium exploration, development and production company, and Wheeler River is their flagship project. Denison has an effective 95% interest in the Wheeler River project, which ranks as the largest undeveloped uranium mining project in the infrastructure-rich eastern portion of the Athabasca Basin region, which is here. Denison exploration and development portfolio consists of numerous projects covering approximately 300,000 hectares in the Athabasca Basin region, with a focus on the eastern portion. Then they also have the McClean Lake project. The McClean Lake project is owned 22.5% by Denison and is host to several unmined uranium deposits, and the McClean Lake Mill, which is one of the world's largest uranium processing facilities, licensed to process up to 24 million pounds of U3O8 per year. If you look at the DNN chart, it bottomed somewhere here at around 22 cents, a wick even lower to 19 cents. We are currently trending up, and we are getting some very interesting patterns here. This can look like a head and shoulders top, but it can also be a fulcrum bottom, and the confirmation would really be a break above this level and finally a break above this level. If that happens, this is a very interesting risk-reward perspective from a technical analysis standpoint. Definitely an interesting event to monitor if we want to get a controlled entry here. Next we look at UROY, Uranium Royalty Corporation, which is, I think, the only pure uranium royalty company. So what is that then? Without going too much into detail in this video. Let me know in the comments if you want me to do a separate session on royalty and streaming companies across various industries. But in essence, royalty and streams are financial instruments. A royalty means that you as the royalty owner will receive a fixed percent of the output or sales proceeds from the property owner without the financial liability. In other words, I pay you a certain amount of dollars. For that, I receive a royalty in return. And in the case of a stream, you pay for a specific amount of the product at a specific price for a specific amount of time. In other words, your price is locked in. This is a simplification, you need to read the details. But the reason that UROY and other royalty and streaming companies can be interesting is because they do not have to manage the projects. They do not have to invest. They don't almost have any operating expenses. Your gross is your net, basically. And if you're a uranium producer, when cost of production is increasing, for example now when oil prices are going up, while uranium price is also going up, your overall profit might not increase, resulting in a flat share price. However, royalty and streaming companies do not have this issue as they are purely getting their uranium at an increased valuation. If we look at the chart, we have not seen that reflected here in the chart yet. Instead, we see that we have been in an uptrend, but now the trend has turned down. But here is once again a very interesting chart from a technical analysis perspective. This is arguably a head and shoulder, but if we break above the right shoulder, which we're very close to doing, that head and shoulders pattern becomes invalidated, and the invalidation is a stronger bullish signal than the head and shoulders is a bearish signal in the first place, if it confirms, which it actually never even did. I'm trying to show you things before they have happened, so you can do your own analysis, monitor this if you decide and so on, and act based on your own decision, not to come afterwards and say that look, you could have done this, you could have done that. Anyone can do that. Now let's look at UUUU, Energy Fuels Incorporated, which is a leading uranium producer in the US. As you can see from the chart, similar to the other ones, dipped coming out of the early 2000 bull market, down to about $1.50 and then down to 78 cents during the COVID dip. Since then, it has changed the trend and trended upwards and enjoyed the large line gold flip on the weekly chart here in December 2020. I also like to look at two ETFs, and we start with URA, Global X Uranium ETF. And you can see which companies are included here on this site: Cameco, Sprott Physical, and so on. It's not purely invested in uranium, and so the exposure to the overall uranium market is also less. As we can see from the URA chart, this looks extremely similar to the previous ones I just showed you. Very similar to head and shoulders formation, but that could turn into a more complex bottoming pattern, which would be very nice because then there is a clear support line for invalidation and there's a chance for a good risk-reward entry, which is all we can ever hope for in the markets. Look how clean this looks, by the way. The other one is URNM, Sprott Uranium Miners ETF, and Sprott as a company built the Sprott Physical Uranium Trust that we talked about in the previous video. This ETF was started shortly before the SPUT vehicle and has been in an uptrend since inception. So now I have explained why, for example, a royalty company can have less downside, but then the upside is less too. What if we get into a full-blown recession? In this stretch of the markets, there are no easy runs like in the everything bubble we've had in the previous 10 years. We have to watch the markets closely. What is special with uranium is that it's a commodity which has to be provided. We cannot randomly switch off and on nuclear power reactors depending on if we have fuel that week from a purely technical perspective. So there is an opportunity for a more detailed analysis of the supply versus the demand, which is different from purely speculative assets like crypto coins. So if there is a supply deficit, new contracts probably have to be negotiated at higher rates. That's why it's at least possible that these general uptrends that we've observed on these charts today, that have held through this absolute market carnage that's been 2022, could continue in 2023 and perhaps even break to the upside, which could be in stark contrast to many other commodities where demand could perhaps drop if this recession goes deeper and there's less demand for the products that those commodities are used in. Now that is speculation, which is fun, but on this channel we're not thinking we can predict the future of markets. We're trying to react to what actually happens. But what about the Bitcoin dump, and is this the bottom? I shared my analysis of the Bitcoin price in last Thursday's TA report and where I'll take what action, so I won't repeat it today. If you remember, you should have it in your inbox. If you're not, you should be. It's the best Black Friday deal of 2022 because it probably saved you from losing your money in the 2022 downtrend. And finally, it's time for Fan of the Day. CTO. I didn't like him during the bull market because he wasn't saying what I wanted to hear. He was saying the truth. I would have saved a lot of money if I listened, but I had to learn it the hard way. Thank you, Matthew. That's a journey we all go through. Please subscribe and bell. Thank you, tack. CTO Larsson out. Hej då!